It's hard to make a decision in this kind of a market because you can see that price here is around this resistance area all the way there. So it's hard for one to say I am buying because of this retest here that is happening all the way here. So it's hard to say that I am buying because of that retest, because buying closer to a resistance is risky, and it's hard for one to say let me begin to sell here going all the way down, looking at this momentum of the previous wave, that okay, this wave was very, very strong and it was very, very aggressive going up. So it's really hard to choose which direction to go with, because it seems like the general price action approach is contradicting itself. The strength is towards the buyers, but price is reacting to a resistance. So what do you usually do in such cases? So what you should do usually, I know that a lot of traders will always try to find like, what decision should I make? Should I buy or should I sell? And then they end up choosing maybe the wrong direction to say, let me begin to buy, looking at this series of green candles that okay, the price is currently going up, so it's likely that it's going to continue going up, but it's not likely, because that's not how price behave. For the fact that you found the price going up, it doesn't mean that it's going to continue going up. So if you can clear the screen and you can just go to a smaller time frame. So those who are in this channel, they know that usually when there is no clarity in a certain time frame, we usually go and consult another time frame, which make things a little bit easier. So if you can see here, as a long-term trader, it's kind of easy for you to make decision that okay, let me go long, because obviously you can see that we have this kind of a pattern going down, and if you can see that this pattern is now getting broken all the way in this area here, and before the pattern was actually broken, we can see that we have these high and this low, which are now signifying, or which are now showing us a new pattern that is information that is going to be heading all the way up like this. So it's easy when you are a lower time frame guy to say okay, let me execute this buy, because obviously you are looking at the market in this picture that okay, we have just a wave going down and then that wave is broken, and also you interpret this low here as a complete low. But with the higher time frame guy, it's a different story. So for you to make the proper decision, you just have to go to a lower time frame and say okay, what is the lower time frame guy going to do? And if he's buying here, what is the risk? What is the risk? Is the risk worth it? For example, if you buy here, you expect that you put a stop loss maybe somewhere below here, which is a little bit better, and maybe your target is gonna be all the way around that resistance there, which is also reasonable, because usually price, before it moves to a new direction, it will usually spend time in that resistance area. So if you go back to our 4 hour, we know that okay, this move is not really scary, because it is still pointing that price is going to play around this resistance area. It is not actually a major move saying that okay, price is gonna go all the way up or price is gonna go all the way down. It is still just a movement within this area here, which is likely to happen. And if you can see clearly, in the lower time frame, there were no contradictions at all. The person just observed that okay, this is a key level, but then also this is some kind of a key level on the smaller time frame because of that resistance there. So, and also you can see that there is a reversal. So he combined these two levels, he observed that there was a reversal, he also analyzed the pattern, and then he saw that okay, the pattern is broken, so it's likely that the market might go to that key level and then bounce back again. So on the smaller scale, on the lower time frame, the prediction is a little bit better and less risky. I don't say you should go to a lower time frame, but I'm saying that if you are indeed pressed into executing a trade, it's better for you to get clarity, and clarity is usually get it if you get into details of what the market is actually doing. But then once the market approaches that area, it is then important for you to reanalyze again that okay, how is price behaving in that resistance? So if it begins to slow down, let's say it's go to that area and it begins to slow down, then it's easy for you to say, okay, let me execute a sell. But when you're executing your sell, you won't be targeting your take profit all the way here. You'll be targeting your take profit all the way down. Why? Because you've entered a little bit earlier and price is indeed at the pinnacle of the resistance. So I hope that is making sense. And if the price doesn't reach all the way down, you will also observe like price slow down. For an example, just go back there. If there was a person who executed a trade, maybe let's say all the way around this resistance here, expecting price to be going all the way down, and then he begins to see price slowing down like this, already the person is now managing his risk in a different way, because if you are selling, you are not expecting price to be moving like this. You are expecting price to be moving as it did with this upward wave, so aggressively going down, because selling, it means that you say that the sellers are strong, but this is not a sign of strength. So that's what you're gonna do maybe when you decide to execute a sell when the price reach that high again. You say, okay, I'm gonna sell, but if price begins to slow down, I'm gonna get out of that market. So I hope this is helpful.